Well, thank you so much for joining us today. It's Friday. All right, we're going to take a look at the setup for today's WASDE report. And keep in mind, that will be coming out at noon Eastern time today and 11 o'clock Central time. And I'll have live coverage of that report when those numbers come off of the printer. So look forward to that. And we'll have first coverage for you on what that report may entail. There's going to be a lot of stuff going on. Now, let's take a look at the overnight trade here and give you an idea how the market was leaning as we head into our final trading session here before the report comes out. Corn softened up a little bit overnight. September was down 2 cents at 6.27 1/4. December kind of held its own, but it was down a half cent at 6.27 1/4 per bushel. So things just kind of getting a little easier ahead of the report release here. Now, with our quotes provided by bar chart, you have the September soybeans going down by 9 cents at 15.11 1/4. That was within about 4 cents of its low from last night. If you look at that new crop November contract, it was down 5 1/4 at 14.43 1/4. On the Chicago wheat, September was down 7 1/4 at 8.03 1/2, and on the Kansas City market, September there finished up 10 lower at 8.79 1/4 this morning. Minneapolis wheat, we had September down 9 1/2 at 9.12 1/4. And let's check out cotton as well. On new crop December, we were down just 3 points. Still up there at 104.56. Look at that high overnight, 106.20 per pound. Cotton has had one heck of a week to the upside. We are joined by Brian Hoops of Midwest Market Solutions. And overall, it looks like the grain sector, the crop market sector, is having a little bit of a bearish trend as we head toward the report. I don't know. I imagine that'll carry over into the open this morning. But are people pretty much headed for the sidelines if that's where they want to be now?
Hey, good morning, Marlon. Yeah, we're going to see some positioning this morning, I think, ahead of this report. We've had a pretty good rally this week going into the report's release, and without much in the way of any fundamental news this morning to trade off of, I think a lot of traders just want to wait and see what the USDA has to say. There's a kind of a difference on yield expectations with this report coming out at 11 o'clock today. USDA is going to base this off of farmer surveys as well as satellite imagery. Now, once we get into September report, that's where they'll take actual field assessments. And so, you really don't have a great idea of how much we're going to drop yields. Now, last year they dropped corn almost 5 bushels an acre and soybeans a bushel an acre. Then we saw August rains that actually dropped prices, and we saw USDA increase those numbers going into subsequent reports. I don't think we'll see that type of a big reaction this morning. Should see a little bit of a drop in yield potential, probably a very conservative one. One thing that we really are trying to watch is USDA has also resurveyed acres, planted acres in the Dakotas and Minnesota. There's been some talk that they could reveal as much as 400,000 acres have been added to the spring wheat crop based off of this resurvey. So that, right now that's just kind of talk and rumors, but I wouldn't be surprised to see the USDA increase those acreage numbers in today's report as well.
Brian, I did hear one little tidbit late yesterday that Argentina has reported only 18% of its new crop wheat is in good to excellent condition. And we're looking at a third year of La Nina. That's not necessarily a very good start there.
That's right. And that's what we need to see a substantial rally in this wheat market. It has to come from supply issues. Demand, I don't think, is just going to be there for this wheat crop to give us a rally in prices. It's going to come from supply problems around the world. The EU has had issues. Argentina's having some issues with their crop. We've gone through our growing season of both the winter wheat and the spring wheat crop, and that hasn't really produced much of a rally other than what we saw early this spring. So if they do have some problems that could lead to export business, that could give us a rally just on ideas of increased exports, although our export pace is still really disappointing.
Well, you combine that with drought in Europe, and I tell you what, there's a lot of powder in that cannon just sitting there. All right, Brian, we'll come back in a moment. We'll talk about the livestock side in just a moment. As we get into our livestock segment here, and we're talking with Brian Hoops, president of Midwest Market Solutions. He's in Springfield, Missouri. Talk to me about the latest in the cash cattle market, if you would. Brian, the information that I had on our livestock summary, we can take a look at what we had, at least on this end anyway. We had seen that cash cattle trade has been generally higher this week. It looks like we had some trade 138 to 140, I believe, yesterday. It looks like we had some trade on a dress basis coming in there about 229 all the way up to 236. I think it was probably the majority of it was closer to 230. What did you hear?
Yeah, we've been hearing, most of the southern trade in Kansas was at 140. That's a strong move from last week. A lot of 135, 136 a week ago. So you're talking at least $4, in some cases $5 higher in the Southern Plains, and you're looking at a wide range in that $2 to $7 higher dress basis. So, it was a very strong week for the cash markets. The futures have responded very well. We've seen, the markets struggle with seasonals, which are lower right now for both cattle and hogs, but they've seen stronger cash trade in both cases, cattle and hogs as well, to kind of buck that seasonal trend. And so we're seeing a nice strength here in the futures. There's probably going to be some hedging coming into this market, just concerns about what's happening with the corn market. If it does continue to extend gains, or if this crop is smaller, producers, livestock producers we've been talking with, want to get something locked in, whether it's with put options or straight hedges, and also get some corn prices locked in, because basis levels are expected to be very tight, especially in the Western Corn Belt this winter.
Let's take a look at how we finished up yesterday then on our live cattle trade. Here we go. We finished up with the October contract. That's where more of your volume would be. It was 62 higher at 1 to 45.10 when we went home yesterday. So that was within about 30 cents of our high of the day. Meanwhile, on the feeder cattle market here, we wrapped up yesterday's session with September 40 lower at 184.60. You have to keep in mind that for a while, corn had some strong gains yesterday. Lean hogs, we finished with October 22 higher at 101.07. Do you have any penny calls this morning for cattle or hog openings?
I think it's kind of a mix to higher opening, both the cattle and the hogs. The October hog market, for example, has been on fire trying to rally up where August is going off the board today. It's aligned itself with the lean hog index. So that $20 discount is kind of a magnet for that October futures. I think you continue to try and narrow that spread. Cattle, I think you could be 10 higher, 10 lower, very mixed and choppy type trade early.
All righty. Well, thank you, Brian, for all the information, and happy report day. Good luck riding through it. And we'll check with you again real soon. Brian Hoops of Midwest Market Solutions. This is going to be a feature-packed day. Janet, I'll turn it back to you.